What's going on, everybody? Michael here. You're watching the Daily Stock Market Brief Show. In today's episode, it's going to be much more shorter than usual. We're just going to be taking a look at the price action of some of these indices. If you're new here to the show, welcome to the channel. This is the Daily Stock Market Brief Show. I do it Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis really just to get a good idea as to where the market might be headed next. Before we hop into today's show, I just want to say thank you for the active patrons, 276. Thank you so much for all of your support. I just recently posted 6 new trade ideas for you all to go in there and add to your watch list, so I hope you enjoy them. I think that they're some pretty good setups. And then also, not just my patrons, but all my active subscribers and people that engage in the content and smash the like button, almost reaching the 80,000 subscriber marker in just shortly past a year. So I'm just extremely thankful for all of your support. Let's go ahead and hop into today's episode. Welcome back, everybody. Looking at the market dashboard. On the left-hand side, we have some indices. And then on the right-hand side, we have the 11 sectors that make up the S&P 500. I like to just keep a good eye on what's taking place here in the sectors. Now, if you didn't watch my weekly recap where I went into significantly more detail, I'd highly recommend that you just go and check that video out, because I do get into, like I said, more detail on these various sectors and kind of what my expectations for the month of May are. First off, taking the lead, energy and materials. Now, energy, we've been saying for now a couple of weeks that energy looked, first off, it's been getting beat up, and now we're starting to see some strength come back in. And also to note, materials, from a weekly perspective, we saw a lot of relative strength coming in, and industrial. So I'm continuing to just look for those type of stocks that have been on a big rampage, but then they've been pulling back, and now we're finding some sort of support, and perhaps now we start a continuation leg higher. So energy has been on a monster tear these past few days, so my eyes are on individual energy stocks that might be breaking out of a period of consolidation. Materials did really well today, and you can potentially say that's because the miners really stepped up. Just looking at silver, take a look at this. Silver up 4.20, 420, yeah, 4.2% for the day, breaking out of this, I'd say, flagging pattern right here, and also this falling wedge. So we broke out of the falling wedge, we consolidated, and now what's even nicer is we're breaking out of a previous area of resistance here. So that to me states, okay, this now has the legs to potentially run significantly higher. Not the crazy amount of volume that came in today, but needless to say, it is more than the previous day. The last day was a red. It was obviously a down day, red. Significantly less volume on that sell-off versus obviously today's big green candle with an increase in volume. The price percent oscillators heading up too, and that's a good sign. It's back above zero, so it looks like a pretty positive breakout. Now, there's a couple warning signs that we're going to be going over today, and we'll get into that here shortly. Here's a chart of gold on the daily time frame. The gold, the same thing, up $24 for the day, 1.36%. It had this flagging pattern. Now on Sunday, I have a sponsored video with a gold explorer company. So I'm going to get into more detail if you're wondering what these lines are on this chart. That is taken from some research from Tom McClellan, and these little pink dots also represent something too, significant turning points or potential turning points. And what I'm seeing right now is, it's pretty much matching that turning point where we potentially head up higher. So I'm going to continue to monitor this, and I'll talk more about that come Sunday. Now, this could have been led because of the dollar's down day today, right? Pretty significant down day, but still not as big of a down day as it was from a previous up day. Now, in yesterday's video, we talked about seasonality for the dollar, and seasonality suggests that we move higher, which could put pressure, and that's the kind of warning sign about it could put pressure on not only equities, but it could put pressure on gold. It could put pressure on silver as well. So let's continue to watch how this develops. This could be just a little consolidation blip, and then we head higher, or potentially this is a big fake out green candle. Needless to say, there's nothing that's certain ever really, but the overall context of this chart is still bearish. So it would be having to swim up a pretty significant river here. So we'll continue to just see how that develops. The 10-year and the 30-year, the 10-year was slightly down on the day. Now, that could also be helping the move in gold. Seeing the 10-year go down and the dollar go down helps elevate the price of gold. Now, as you know, we've been talking about August when the 10-year yield right here bottomed. That's when gold right here in August topped. Okay, so we don't exactly obviously know where the yield might be headed next, but from a technical standpoint, we did say that this does look like a bull flag and we might be potentially breaking out further. But that's okay because it doesn't necessarily mean that gold can't move up with the 10-year. The gold really does track the real yield, and this is the nominal yield. So if inflation outpaces this 10-year, that means we could see the 10-year rise with the price of gold. So just something to think about, something to watch. But as it stands right now, flat for the 30-year today, and then just slightly down on the day for the 10-year. This is interesting to me, and this suggests potentially why yields can go higher. This is the 10 to 20-year Treasury Bond ETF, TLH. Now, this isn't for certain, obviously, either, but notice the big volume coming in here at this kind of flagging pattern. So this could represent a potential, reversal. And the only reason why I think it could potentially be a reversal back to the downside is because when we get in these huge volume days, we typically, a few days later, we get these sell-offs. So the last big volume day, which was significantly more here, we sold off. The last volume day prior to that, we sold off. And then this one here was a pretty significant volume day, but we did not sell off. We came up and we pulled back, had volume, and then we actually moved higher. So perhaps this is a bull flag, and now we're starting to see some volume come in, and then we break out of the bull flag, which could be bullish, obviously, for bonds, and then bearish here for the 10-year, the 30-year, etc. So we'll see how that develops on this big increase here in volume. To me, I think that with this daily candle, this inverse little hammer candle, inverted hammer candle, it feels like it might come back down a little bit, but we'll see. And if that's the case, that means yields could obviously head higher, which could potentially be putting pressure on the miners or gold and silver. So something to watch. Like crude oil, this is a little flagging pattern right here, still struggling to kind of hold above this 64, keeps wavering back and forth. But overall, it looks pretty solid to me. We're above the 50-day. We're in healthy bullish context. Things look pretty good. And if we do start breaking out to the upside, and I don't have the weekly chart here, but I talked about that in my last weekly recap. If it starts breaking above some key levels, there's no problem with oil even screaming to $75 rather quickly, which could very, very, very well be beneficial for these stocks that are kind of tied to the commodity, which is, for example, various energy stocks. Now, what I find very interesting going on right now is that as oil goes up, oil is one of the biggest expenses for transports. Because they're transporting, right? They're transporting goods throughout the country, throughout the world, etc. And the transports just continually ripping higher and higher. And we've been talking about how high they are from a weekly perspective, monthly perspective, and even obviously a daily perspective in these extreme overbought territories. So we see oil continuing to rise and rise. At what point does that affect the transports? Because right now it hasn't been. You can see we come through these consolidations, we break out, consolidation, breakout, consolidation, breakout. Very small consolidation, we see a breakout candle taking place right here. Price percent oscillators, bullish crossover. This breakout right here didn't happen on the greatest of volume, but it's still a breakout. So we'll continue to see how this develops. Perhaps that turns into a fake breakout, and then we continue to see the price of oil rise. But at some point, I believe that if oil does start moving up north towards 75, I feel like the transports are going to have to see somewhat of a correction here at some point as they continue to scream higher. So just interesting stuff that I wanted to point out. The SPY on the 15-minute time frame, I just want to map out some key levels heading into tomorrow. Obviously, it's been just some frustrating price action, right? We've been boxed up here, just spelling out letters. We got a V here and an M right here. It's telling us that the virtual machine is about to kick in. I don't know. It's this price. This is either some just some very, very lucrative distribution, meaning that we're coming into an area of where we're dumping, or the professionals are dumping money to the retail traders in mass portions, and you just see this massive chop going back and forth, this very unique distribution, and then we're going to crack lower and then go to a correction phase, and then we're going to probably get bid right back up to head higher. Or this is just, it's just so hard to say. So all I can do really is just map out key levels. And the key levels to keep an eye on is 416.50. That is clearly an area of support. We tested here, 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 almost here. So if it does come down to these ranges, I would say that'd be a great risk versus reward. You can enter in, have a stop loss, give it some room, maybe $1 or so for breathing room, and then you might, boom, and it might bounce right back up. Something to call out, the bears have been making progress. You have a high here, a lower high, and another lower high right here. We have a gap above us, okay? That would be resistance. That's right around 420. And then we have this gap below us, which can also act as an area of support. You saw the sell-off towards the end of the day, okay, for about an hour that took place. So we had this ramp up, and then we just completely collided there, and then the last few minutes of trading, we got bid back up above the 50-day moving average, right where this area was. I think I notified it on Twitter saying if we did crack below this 418.14, you'll probably see fuel added to various short positions, and definitely saw some fuel added to some various short positions, but then it immediately got bid right back up. Still, like I said, context is still bullish. 200 days sloping up, 50 days kind of sideways here, but the price action is above it. Now, let's look at the volatility index, the VIX, just in a sideways kind of chopping channel. The Bollinger Bands are starting to widen right here, so that is something to take note of, because when they contract, it could lead to an explosive move. I think that we need to get above 20 to see an explosive move. 20 was support here, and then it's been acting as resistance, and then we have a floor kind of set right around 16, just slightly above it. As far as the last week or so of trading goes. So let's continue to see what happens here. Just note that if we do get a big push up higher and it just reaches out to 30 or 40, sometimes that's a very good area to start positioning long in various assets, because that's typically an area of resistance right here that we've seen, which means if it starts falling from that point, it could be good for various long positions in the S&P 500 or various stocks. Now, from a daily perspective, you can see here, we're just grinding slightly higher, just putting in a higher high and then a higher low from the previous day. Momentum is still kind of dying off. We have a negative divergence that's still building there on the RSI and the price percent oscillator as well. So we do have exposure to the downside. This could be just a period of consolidation and we rip higher. Like I said in the previous video, the month of May is typically a boring month. It doesn't typically, from a seasonality standpoint, it's nothing to get crazily excited about. That could be different this month. So given the current context, right, we're in very bullish context, this could be consolidation. We need to at least be prepared for the month of May does want to start taking off on us like it did here at the beginning of April, because if that is the case, well, then we can see some massive gains. As it stands right now, I don't want to short into any of this, because I could get lucky and it could go lower, but the context is still very bullish. The price action here is still above the 5 EMA. It's above the 20, so obviously above the 50, 100, 200, and everything's sloping up. So we'll continue to see how that just plays out. The Qs here is just frustrating chop back and forth. We're where we're at, where we were, April 5th, April 6th, right around there. So we've been in this channel. 342 is resistance, 334 is support. If it comes down here, you might even consider hedging long at this specific point. I don't. Just make sure you have a stop loss in place, probably below this gap, so below 332, because it could come in and then bounce from those levels. What I will call out here is this little death cross that happened on this short period time frame where the 50-day moving average crossed beneath the 200-day moving average. So this could be a potential shift in the short-term trend. However, don't hold too much weight on that specifically. I think that we need to just get out of this channel to determine where we might be headed next. There are some things that are kind of red flags for me, and I'll go into that. Let me first show you the daily time frame. You can get a little bit better of a picture here of this price action chopping back and forth. You can see that we're now closed below the 20-day moving average, and we still have a little bit of support right here, right around 333, 334, this kind of zone that we already previously mentioned there from the 30-minute perspective. Now, you know that the NASDAQ, a big portion of the NASDAQ is semiconductors. And semiconductors are a little bit of a red flag to me, and I have a feeling that people will start pointing this out. Now, I've been hearing a lot of people talk that semiconductors are the place to be right now. I don't see that right at this particular point in time, but I can potentially. Now, this right here is just a broadening wedge pattern, megaphone pattern. So it says to me, okay, we have exposure to potentially come down to the 200-day moving average, which is 360 to 370. That would definitely bring the NASDAQ lower, seeing the semiconductors, fall like that. Now, we still have the 100-day right below us, and that can act as a very strong area of support. It acted as a strong area of support right over here, right in around March. So I don't want to put too much weight on that. Now, one thing that I want to call out is this Bollinger Band width. When it tightly contracts, it can expand when it starts breaking, when the price action starts breaking key levels. Notice how this was an area of resistance right here around 450, but the price action didn't break above 450 to do the Bollinger Band squeeze to the upside. Actually, the price action has now broke a key level of support, including the 50-day moving average. So this could mean that we're getting a Bollinger Band squeeze to the downside, which is a very likely possibility. So we had resistance here, support here, and now we're starting to crack beneath it. So this could be just a little, bear trap, where people start shorting into it, but then all of a sudden we get bid right back up, and that would be, a good sign. But as it stands right now, this does not look all too good. Down 1% on the day tells me that there could be very well some more downside momentum in semiconductors, which could put pressure on, obviously, the NASDAQ and various indices. So we'll continue to watch this. A bullish sign would be getting back above this red line, and that red line is a high, I would say getting back and closing strongly above 425.50 would make sense to me. And then I would consider, okay, maybe it's going to be bouncing from this 100-day. Now it's a good long setup. We're not there yet, so let's see how that develops. The next one I want to talk about is the Dow Jones Industrials. This is the DIA. It was in this little flagging pattern, and I was keeping an eye on it, but towards the end of the day, we cracked down through it. We also were in this, the bears were making momentum to the downside, but we just did this gap up today, and we gapped up through this previous gap over here. So we have a double the gaps right here, and then the price action just went higher, and now it's kind of starting to roll over. So this is interesting to me. So it could be support right around 340 to 340.50, and we potentially head higher, but this is a bullish breakout as we previously just ran into this previous all-time high. So we'll see how this one wants to pan out. I wanted to show you from this perspective with the red line going down, but I will be moving this up to be more of a channel now, given the current price action. Now here is the daily time frame for the Dow Jones Industrials. This to me looks fairly bullish. It's just chopping sideways back and forth. This could be some nice consolidation before we break out and start moving higher. So look for a breakout above the previous all-time high. And if that is the case, well, look for volume to confirm that type of a move, and we could head very well higher. The overall context is nice. We're above the 20-day moving average. We're above the 50 and above the 200, and they're all sloping up right here. So if we start cracking below this 33,500, maybe just slightly higher than that, that can be a little bit of a red flag where we can easily drop 500 points to probably go test the 50-day moving average, which is right here at this previous area of resistance. So that could be support, and then we'd have support right here. So if you are watching this and it cracks down through it, I'd be looking at down here at around 33,100 as an area to potentially start going long in from a good risk versus reward standpoint. All right, everybody, that is all I have for you on today's market brief. Short and to the point. Like I said, a couple good things taking place in the price of gold and silver, but I showed you kind of what you might want to be cautious of as far as the dollar and the yield go, and then just the price action. It's a bit frustrating here, so if you're having trouble getting any momentum on any of your trades, just know everyone in the markets right now is having trouble getting momentum on their trades. Hope that helps. Talk to you all later.